Hello and welcome back to Global Value. Today we are going to be taking a look at PayPal Holdings, ticker symbol PYPL. We are going to be running through an 8-pillar analysis of PayPal, taking a look at the financials that underlay the fundamentals of this business and really understanding this business based on those financials. So PayPal has been hit hard recently. Currently they trade at $102 per share. They are down 63% from their highs last year. Over the past 3 years, they're down 2%. Since their IPO in July of 2015, PayPal has still done very, very well. They've returned 17.5% compounded annually. That's even in spite of this huge one-year decline. And their business has done well, as we will continue to see. We can see that PayPal had a 52-week high of $310, and then they're only trading $10 above that 52-week low. Nonetheless, PayPal is still a $119 billion market cap company, so this is still a very large enterprise. So to give us some background on PayPal, PayPal Holdings operates as a technology platform and digital payments company that enables digital and mobile payments on behalf of consumers and merchants worldwide. PayPal was spun off from eBay in 2015 and provides electronic payment solutions to merchants and consumers with a focus on online transactions. Its payment solutions include PayPal, Xoom, an international money transfer business, and Venmo, a person-to-person payment platform, as well as Braintree, Hyperwallet, and iZettle. The business's payments platform allows consumers to send and receive payments, withdraw funds to their bank accounts, and hold balances in their PayPal accounts in various currencies. It also offers gateway services that enable merchants to accept payments online with credit or debit cards, as well as digital wallet services. The company had 426 million active accounts at the end of 2021, including 34 million merchant accounts. PayPal Holdings Inc. was founded in 1998 and is headquartered in San Jose, California. There's also a book that came out about PayPal this year called The Founders that I heard was really good, and I have not read yet, but am really looking forward to getting that opportunity. For those of you who don't know, PayPal was founded by Max Levchin and Peter Thiel. It was also managed by Elon Musk and Reid Hoffman, the founder of LinkedIn. So they had quite the star-studded management at PayPal back in the day. So let's get right into our 8-pillar analysis. Starting off with pillar number 1, we're looking for the 5-year PE to be below 22.5. Looking at PayPal's 5-year PE, it came in at 60, so that's going to be an X. However, they're currently trading at 29 times earnings, and this company definitely has some room to grow. Pillar number 2, we're looking at the 5-year average return on capital. We want this to be above 9%. We see that PayPal over the past 5 years has averaged in the low to mid-teens and has an average 5-year return on invested capital of 12.5%. So that is going to be a check there. Next, we're looking for 5-year revenue growth. So over the past 5 years, in 2017, PayPal did $13 billion in revenue. In 2021, they did $25 billion in revenue, so they have almost doubled revenues within the past 5 years. That's a big check mark there. Scrolling down, pillar number 4, we're looking at net income. Again, we want to see 5-year net income growth. So in 2017, PayPal had $1.8 billion of net income. In 2020, they had $4.2 billion of net income. So that's another check mark there. For pillar number 5, we want to see that PayPal is decreasing shares outstanding. We don't want PayPal to be issuing new shares and diluting existing shareholders. Getting diluted ultimately reduces your ownership stake in that business, so that's a big problem as a shareholder. You don't want to be invested in companies that are significantly diluting you. In 2017, PayPal had just over 1.2 billion shares outstanding, and in 2021, they had just under 1.2 billion shares outstanding. So not a lot of buybacks here, but they are slightly reducing that share count. It's probably a good thing that they didn't buy back a lot of shares trading at some of these higher multiples. So that is a check on pillar number 5. So far through 5 pillars, we have 4 checks and only 1 X. Let's move on to pillar 6. So pillar number 6, we're looking for 5-year free cash flow growth. Free cash flow is cash from operations minus capital expenditures, and minus cash acquisitions. In 2017, PayPal had $2.5 billion of cash from operations. They had about $990 million of expenses, which leaves them with $1.5 billion of free cash flow. In 2021, they had about $6.3 billion of cash from operations. They had about $3.6 billion in capital expenditures and cash acquisitions, which leaves them with $2.7 billion of free cash flow. So Pillar 6 is a check. In 2018, they had $2.5 billion of free cash flow. In 2019, they had $3.3 billion, and in 2020, they had $1.4 billion. Altogether, PayPal's average 5-year free cash flow comes out to $2.3 billion a year. Next, for pillar number 7, we want net debt to be below that 5-year average free cash flow number multiplied by 5. So in the past, PayPal has actually had more cash and cash equivalents than they've had debt. However, now they do have a little bit of debt at only $310 million. So they're getting, $2.3 billion of free cash flow a year. So this is a huge check there. 5-year average free cash flow number multiplied by 5 actually comes out to $11.5 billion. So plenty of cash to pay off any sort of debt. Last but not least, pillar number 8, we want their market cap to be below that 5-year average free cash flow multiplied by 20, just to give us a starting point about what might be a reasonable amount of money to pay for the company. So they have a $119 billion market cap. Multiplying $2.3 billion times 20, that comes out to $46 billion. So just on that metric, PayPal does look like it's still expensive. However, you're going to want to do some more work here. Free cash flow does subtract both capital expenses as well as cash acquisitions from cash from operations. So really, if you want to dig into PayPal more, you have to understand what these acquisitions mean for the company. Did they overpay? Are these acquisitions actually going to be value creating for shareholders? That's where a lot of their cash flow has gone in recent years. So to understand PayPal better, you really want to understand how they're allocating capital. PayPal had some hiccups last year with potential acquisitions where Terry Smith of Fundsmith was pretty vocal about his displeasure that PayPal was pursuing purchasing Pinterest. He had a quote that he said PayPal's management should stick to their knitting, and I'd happen to agree with that. So you'd want to really look at, are they sticking to their knitting? Are they in the best interest of shareholders of the company moving forward? So in summary, PayPal checks the box on 6 out of 8 pillars. This is a strong and growing business. The only 2 pillars that were X's on PayPal were both the valuation metrics. So again, you have to do the work here and you have to understand more about the business, how the business is allocating capital, how the business is going to continue to grow into the future to have a reasonable idea. Maybe those valuation metrics do sell the business short. Maybe they don't. To be an investor in the company, you've just got to do the work and really understand the business at a deeper level. So for that, I highly recommend looking at the filings in Ticker, read through some of their 10Ks and annual reports. Also read through some of the transcripts of their earnings calls and see how, what management actually thinks of the business. PayPal's management also came into some heat because they guided for, pretty good earnings. Then they had to deal with not being the default payment provider for eBay, which still made up a good portion of their revenues and their profits. Accounting for that lowered some of management's growth guidance. So again, if you want to invest in this business, I think PayPal is a strong company. When you're investing and you purchase stocks, you're really investing in the companies underlying those stocks, right? So you're investing in PayPal as a business. So the business looks strong. But again, you have to do the work to understand those valuation metrics. That's it for today's stock analysis of PayPal, ticker symbol PYPL. If you enjoyed the video, please be sure to like and subscribe and comment down below what company you want me to take a look at next. Thanks for watching all the way to the end.